Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through two index ETFs, specifically the S&P 500 indexes that Vanguard has for Canadians, because I've been getting some repeat questions, not repeat questions, but a lot of mentions of these specific funds, one more than the other, and I'll explain which one that is and which one I favor over the other, and my reasons on why I favor that one over the other. And you'll notice that they are pretty much identical, but before we get into that, let's give you guys an update on the portfolio here. And if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So Wealthsimple Trade has made a little bit of a facelift update to their platform. As you can see, for some reason, you can see my little bit of crypto that's in there because they had some promo on there. So I used it and I bought some Doge and some Shiba, which is fine. So you can see that. Here's the watch list. If we scroll down, you can see the portfolio here. Personal account, those are where the referrals go. Will get transferred in tax-free savings account. So it's down 88% because I transferred out some funds into the tax-free savings account. So on the day here, doing very, very well. Portfolio today closing out at $9,194.09, up $59.30, up 0.65%. I just have a feeling that value stocks are going to be the play of the year for 2022. So just remember and put that on record. And for the week here, we are up $126.84, up 1.40%. For the 1 month, we're up $249.77, up 2.79%. For the 3 months, we're up $778.82, up 9.25%. For the 1 year, we're up $1,643.22, up 21.76%. And since starting this portfolio, we're up $1,885.55, up 25.8% in the portfolio. Okay, so that's the portfolio. It is the end of Tuesday, but you'll be seeing this Wednesday. So we're going to talk about two index ETFs, both indexing the S&P 500, both from Vanguard. Which one I would pick, and again, this is not financial advice, I'm just giving you my opinion which one I actually hold. The two that I'm talking about are VSP, which is the one you see on the screen here, and the next one is VFV. Both identical in most ways, except one is Canadian hedged and one is not Canadian hedged. The one that is Canadian hedged is VSP, and the one that is unhedged is VFV. So we're going to talk about the Canadian hedged one first. And if you don't know what Canadian hedged means, it is protecting you from currency exchange. And I'm sure you know how I feel about currency exchange, because when you do a currency exchange on Wealthsimple Trade, which in this near future, they will be changing that, where there is no fee on the currency exchange, except for the currency exchange itself. You don't have to pay that 1.5% fee, because everyone was up in the arms with the 1.5% fee, which I don't really care about, because it's not that big of a deal. For me. For others, yes, maybe. For me, not so much. Anyways, Canadian hedge protects the buying power of this fund. So you're hedged with the Canadian dollar. So if the Canadian dollar goes down, you don't really lose value in that. So essentially, it doesn't have too much to affect the returns on the fund itself. It just affects your buying power. Okay, if you don't know what buying power is, it's how much of the currency you can use to make purchases. It's like if you were to take $1 US and transfer it to Canadian, you would get like $1.60. I think $1.30, sorry. And so you have 30 cents of more buying power, okay? So Canadian hedge protects you from any currency exchange. The only downside is you do not benefit from any currency strength in the US dollar or in the Canadian dollar. The other thing I want to notice, you guys to notice, is that with VFV, same identical portfolio, same pattern. I'll do the thing here again. So as you can see, Canadian hedged and non-Canadian hedged. VFV is the unhedged version. So in the unhedged version, what are the benefits? They are totally identically the same. They both index the S&P 500. They're both the index ETF of the broad S&P 500, broad market. The difference is the VFV is unhedged. So what does that mean? That means if the Canadian dollar goes down and the US dollar goes up, you benefit from that in buying power. It does not affect necessarily your returns. It just affects your buying power. The expense ratios, the management fee is 0.08 on VFV, and same thing with VSP. We're going to get some tongue twisters up in here for sure. But as you can see, the MER, if you don't know what an MER is, it's called a managed expense ratio. That's what it stands for. On VFV, it's 0.08, and expense ratio, management expense ratio for VSP is 0.09. Why is there a difference? Well, it's an expense. It's an expense to hedge the Canadian dollar against US dollars so that you have the same buying power 1-for-1, so you are not affected by currency exchange. And so they add that on to the expense ratio. And so you can see the price is a bit different. Market price 7766 on VSP, and VFV is 105.93. And so it is a bit more costly, but you know, you're benefiting from having that extra buying power that comes into play. So which one do you choose? It's definitely based on your decision and your research and due diligence. Do you want to be hedged or do you not want to be hedged? For me, I honestly don't care. I'm not one that follows currencies, and I don't do Forex. So it's not of interest to me. It doesn't matter to me. And besides, if once you can hold US cash in your account, you can just transfer it hopefully into another US account where you can just withdraw the funds and use that as buying power in the United States or somewhere else. And I know for a lot of retirees in Canada, they are snowbirds and they tend to go south. And where is south? Down to the US. And so it's nice to have that currency. My neighbor one time asked me about currency exchange, and he was just, we had a conversation if we thought the Canadian dollar would come back up to par with the US dollar. And that happened back in like 2000, I think it was 2013, maybe. Yeah, 2013, 2017, where we were almost dollar for dollar with the US, give or take a few cents. And now we're back up to like back down to 0.6. I think I haven't checked today, but again, I don't check that often because it doesn't matter to me. So which one do I pick? I pick VFV for myself. And the reason I pick VFV is because the expense ratio, and again, it doesn't really matter to me. 0.01% is not life-changing money. I'd rather be unhedged because I would like to benefit from the buying power. Because honestly, do we truly believe that Canadian dollar will outperform the US dollar? You know, we're back down to the levels of like 2000, I think it was 2002. We're back down to those same levels, and we haven't been on par with them for a long time. And it's really unlikely that, you know, we could go dollar for dollar and par for par. So that's my big take. VFV is in my opinion the way to go. Again, not financial advice. If you want to learn how to calculate the MER, just take $1,000, take the 0.08% for every 1,000 is about 80 cents of your return, paying as a management fee. You know, over here it's 0.09, pretty much identical, but VFV does benefit from the unhedged portion of it. And yeah, that really covers VFV versus VSP. Again, the management expense ratio is a bit higher on VSP because of the Canadian hedged vehicle that they use. I'm not exactly sure how they use it, but to protect you from a decrease in the Canadian dollar or increase in the Canadian dollar, you do not benefit and you do not lose. And so you're playing strictly on price and capital appreciation, where VFV benefits from any currency. If the Canadian dollar goes down, that benefits the VFV index fund itself. If the US dollar goes down, or sorry, if the Canadian dollar goes up, it actually affects VFV in a negative way, which is just buying power. For the most part, the returns will be the same. And for dividends also, I guess I should mention that, is these do pay dividends. Now, it's not a large dividend, but do be aware that you will get that 15% withholding tax on these funds, regardless if they are in Vanguard Canada. And so just be aware of that if you're one that really is upset about the 15% withholding tax. If you're not, if you really don't want to pay it, you can just put it in your RSP. But again, I think I talked about RSPs. They only make sense for certain people. I think TFSA is just the way to go. And then non-registered at that point, unless you're making huge amounts of money and you need to bring your income down for a tax rebate. VOO is the American version for Vanguard in the S&P 500. I don't own any of those, but again, it's because we have the option to buy it in Canadian, which is VFV, to avoid that exchange rate that people throw their arms up in the air about. And so VFV is my choice between the two because honestly, I don't care. I don't care what the dollar is doing. It doesn't impact my life significantly, maybe a little bit, but really not significantly at all. It's just the buying power and the lower expense ratio for those that really pay attention to that. Again, in mutual funds, the expense ratio is a bit higher. You're looking at some of them range from 0.4% to almost 2%, maybe to 1.5%. But with Vanguard, you're looking at 0.08, which is 80 cents on per thousand. And on the VSP, again, is 0.09. So you're looking at 90 cents per thousand. And so that is what that's what I do, is VFV is my choice between the two. And hopefully that answers you guys' questions on that. So again, dividends have a 15% withholding tax unless you hold it in an RSP, but really not a big deal because most of this is for capital appreciation or growth over time. And we all know the S&P 500 since like the 20s has done 10% average per year. And I think this year, I think it's on track to almost hit 20%, if I can find it, but well, I can't find it, but I think we're in that 19% or maybe even 18%, even with the rocky beginning of December that we had and the end of November there. So hopefully you guys did enjoy the video. Hopefully this does answer your question. And, you know, there is a like button down below. So if you don't mind hitting that, I really appreciate it. Maybe hit subscribe if you want to stay up to date where I answer your questions, where we go through a dividend portfolio that we build right in front of your eyes with $100 a week. And leave some comments down below. And also, there is a referral link down below that you can use to get one free stock once you fund your account, one for you, one for me. And that'll get us on our investing journey for yourself. And if you want to follow along, because this is for the long haul. So other than that, guys, have a great week and we'll see you in the next one. Bye.